Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Monday, May 18th, 2026. Stocks finish split, and the vibe, cautious. Here's the headline: an oil and yields whipsaw hit semis hard, while banks and staples quietly carried the tape. The index looked deceptively calm. But the rotation underneath? That was the real story. Looking at the S&P 500 heat map, the board was totally bifurcated. We saw more green than red overall, but that red was highly concentrated. Where? Right in megacap tech and semiconductors. Meanwhile, the green was way more spread out, with financials, energy, and staples doing the quiet lifting. And that's exactly how you get a flat-looking index that still feels like a really busy day. And that heat map pattern matched the money flow perfectly. The leaders, financials, consumer staples, and energy. On the flip side, information tech lagged, specifically semis and equipment, along with consumer discretionary, taking a hit from weak autos. So what's the framing here? Traders reduced crowded, high-beta AI exposure as yields rose, leaning right into steadier earnings streams and rate beneficiaries. It didn't read like a market-wide panic, more like risk budget management. Zooming out, the whole day traded like a massive tug-of-war on one side, AI momentum and dip buyers in growth. On the other, macro vigilance. We're talking higher yields and crude volatility, keeping inflation sensitivity front and center. The megacap generals were flat to down, muting the index despite the better breadth. The core tension? It wasn't resolved today. It was basically postponed, with the market choosing a defensive rebalance over an outright risk-off liquidation. Two pieces of chatter stood out today, though neither is confirmed. First, desks circulated a geopolitical strike timing rumor tied to Iran. That kept crude and risk appetite moving in very quick bursts. Second, trader channels pointed to unusual call activity in a few high-vol AI infrastructure names. The framing, positioning, not fundamental confirmation. The takeaway here, headline risk and positioning talk likely amplified those intraday rotations. NVIDIA stayed right at the center of the tape today. Even on a mixed day, the main driver, sector-level semiconductor pressure plus positioning risk after a massive run. But here's the clue that mattered. Think of NVIDIA as the general and the supply chain as the troops. When the general holds up better than the rest, it tells you the selling is selective, but it definitely keeps traders on high alert. Micron, ticker MU, was one of the sharpest tells, dropping nearly 6%. The narrative pinned it to an acute semiconductor and memory risk-off, where supply chain and pricing cycle sensitivity totally dominated sentiment. Why does this matter? It's straightforward. Memory is treated as a high beta lever on AI infrastructure, and Micron's drop broadcasted some serious degrossing in that part of the stack. Taiwan Semi, ticker TSM, dropped just over 3%. The specific catalyst, selling pressure tied to a disclosed plan to reduce its stake in Vanguard International Semiconductor, or VIS, in a session already leaning heavy on selling semis. Weakness in this foundry bellwether reinforced a big idea. Chips were being used as the funding source to rotate into everything else. But ServiceNow, ticker NOW, was the exact opposite side of today's tech story, surging almost 9%. The driver bullish analyst commentary highlighting massive upside from automation workflows, rather than AI displacement fears. In a tape that was selling semis, this looked exactly like software as shelter. Investors are still paying up for AI adoption, as long as it feels durable and monetizable. NextEra Energy, ticker NEE, was a clean single-stock story. The weakness here was driven by its announced acquisition of Dominion Energy, ticker D, in an all-stock deal. It's classic deal-arb dynamics pressuring the acquirer. And it's a great reminder, even on a huge rotation day, M&A action can still override the usual sector tape. Exxon, ticker XOM, sat right on the day's biggest pressure point, oil headlines. Energy was flagged as a true leader, framing Exxon as the geopolitical throttle in this whole inflation and rates narrative. Even without a massive single-stock print, it mattered. Why? Because crude volatility was one of the absolute key forces steering today's rotation. Looking ahead, the near-term catalyst is still geopolitics and oil headline risk. Why? Because it feeds straight into inflation sensitivity and yields. Looking at the calendar. Watch Tuesday, May 26th at 10 a.m. Eastern for CB consumer confidence. Then Thursday, May 28th, that brings a high-impact data cluster, core PCE, preliminary GDP, unemployment claims, and new home sales. The big question for the market right now, does the rotation cool off? Do semis stabilize, or do defensives hold the lead? Right now, nothing is a given. Here's the bottom line. Today was a rotation day, not a full reset. The indexes were mixed, but the internals were incredibly active. Semis acted like the funding source, while banks, staples, and energy happily took the baton. For the next session, the tell stays exactly the same. Watch oil, watch yields, and watch whether chips can finally find their footing. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.